video. Here we go. Here we go, yo. Ooh, look who's here this evening. Good evening, good evening, good evening. How are we doing today? Just getting ready to get started. Duke, what's happening? Lucky. Angel. Parkes is here early. Duke, what's up? Coach Joel's here. Sonny. Drenical? That's an interesting. Ken Drenical. All right, is what it is. All right, let's get that one out of here. Let's get this one out of there. Let's get this one. What are we doing? Not now. MK. Jill Bruner's in the house. Kermit. MK. Birdie. Sup? Sup, Jill? Where's the old boy tonight? Keith Worry. Marina. Andrew. Jamie. Cool beans. All right, let's take a look at this. And we're ready to go. Off like a flock of turtles. All right. All right, all right. Alex is here. Alex, how's it going? Over here early. Okay. Jill, the other Bruner is sitting to my right. Well, at least he's right, and he's not left. Amy, how are you? Political Cow. Robert, Rick. See Miami, what's happening? All right, so we're getting ready to get started. We got our recording coming along. Now, forgot my lights. Light. And more light. Not that they help it any. Is investing in stock better than working 9 to 5? Oh, let me tell you this. This I try to tell my children all the time. Profits are better than wages. Okay, understand that? Profits are better than wages. Alex, what's up? Happy Friday. How do we think the market will react next week ahead of election? Honestly, don't know. I remember 4 years ago, it kind of interrupted things, but here's the thing. As soon as the election happened, a lot of stocks just shot up to the roof. Lakin, sorry, that's J. Aiken. Is that J. Aiken or I. Aiken? I have no idea. The print is so small. How I get money being a kid? You ask your parents. I don't know. Well, here's the thing. I've been working since 1973. I was in 4th grade. 4th grade, I got my first job. Milan, how are you today? So, in 4th grade, I was 10 years old. I had my first job working at Old Man Simmons' farm, picking tomatoes, green beans, watermelons, squash, going out into the woods, cutting firewood, loading up the truck. Yeah, it was fun. No. But here's the thing. I had my own money at 10 years old, so I could do whatever I wanted. But then again, it was a different world back in the 60s and 70s. Alex, do you think small cap stock will surge and rally? Mind charting DNA. Hold that thought. Can you explain for a beginner like me, if I put money through a stock exchange site, do I lose money daily if I don't use it to buy? No, you don't. If you put it into a trading account and you just let it sit there, it actually gains interest. Actually gains more interest than you would if you put it into a savings account at a bank. Because I believe the trading platform that I use pays 4% interest on a savings account. Okay, Alex wants to look at TNA. Why are we looking at TNA? What the heck is TNA anyway? I would say what I think TNA is, but we're in mixed company and it would be inappropriate. But I'm sure some of you bachelors out there probably know what I'm thinking. What is your thoughts on SPY? Amy, okay, Amy, you've been here a few times, okay? I'm not 100% sure if you actually heard my opinion on SPY, SPY. Okay, Ken, how's it going? I don't like SPY, and there's a reason, all right? Let's hit TNA first, and then we will take a look at SPY, and I will let you know why I don't like it. Because if you really, really, really look at the numbers for SPY, you wouldn't buy it either. That being said, let's look at TNA first, and then we'll move on to SPY. Okay, so TNA is Direxion. Okay, now I've never heard of it, and usually when I never hear of something, it usually doesn't have dividends, doesn't have options, or it is, oh, you got to be kidding me. Are you serious, Alex? Do you see this number right here? That is the yield. Do you know what yield means? It's kind of like a rate of return. So if I put in $100, at the end of the year, I'm going to get this rate here. All right? That rate is 0.97. Do you know what that means? If I put in $100, I'm not even getting 1%. If I put in $100, I'm getting back 97 cents for the whole year. That's not even 1%. Now, I'm looking at showing you how to get 1% every week. That's over 50% per year. This is 0.97% per year. I'm going to say hell no. But let's see what dividends they actually pay. Because, you know, we are a dividend investing site, and I do like dividend stocks. Now, does this thing even pay dividends? It does. So let's take a look at how well this thing pays dividends. All right, I'm going to say no right off the bat. 2008, 2009, 10, nothing in 11, nothing in 12, only once in 13, once in 14, nothing in 2015, nothing in 2016, once in 2017, twice in 2018, twice. Okay, then it goes to twice a year, and then it goes to 4 times a year. Like, this thing's all over the place. This is a hell no, double hell no. And that wasn't even looking at the numbers. Look at the numbers. 1, 0, 1, 117, 3, 59, 24. It goes from 59, cuts it in half again, almost eliminates it. Double hell no. Sorry, Alex, it is just horrible beyond horrible. All right, so let's go and take a look at spiders. Now, Amy wants to look at spiders. Now, Alex, that's not to say if you like it, hey, more power to you. Okay? I'm just looking at the numbers. I'm not giving suggestions. I'm not giving recommendations. I'm a factual numbers kind of guy. Okay? 1 + 1 = 2. If I put $100 in at the end of the year, or with TNA, I'm getting 97 cents. I'm not even getting a buck. Okay? So it's 97 cents for every $100 you put in. That's per year. Now, when I do my trading, if every $100 I put in, I get $50 back. That's a 50% yield. Huge difference between 50% and 0.97. Yeah, no thank you. Anyway, now, well, let's go back to Yahoo Finance and explain to you exactly why I don't like SPY. Now, Amy, who asked for SPY? Amy did. All right, so Amy, you've been here long enough. You have seen me do the numbers, so I don't know why you would ask me to take a look at SPY. More than likely, you probably haven't looked at it yourself. So let's take a look. Now, when I tell you, when I tell you I'm 60 years old, I'm retired, I really don't want to go back into the workforce. Okay, last year I bumped into this guy at the gas station while I'm filling up my vehicle with gas, and we got talking. The guy's 84 years old, looked really spiffy, you know, I mean, really spiffy. Nice suit, nice tie, a nice little uniform, had his name in the tag. And I asked him, I said, how old are you? He said, I'm 84. I said, you going to work or do you own the place? He says, no, I'm going to work. I said, all right, you going to work because you want to get out of the house and just get away from things? He says, nah, I got to go to work so I can help pay the bills. 84 years old. 84 years old, and he has to work to still help do the bills. How can I invest $1,000 risk-free, highest payout? Hot Wang, how are you doing today? You're definitely in the wrong place because that's not the kind of investing I do. Sorry, but welcome to the crowd anyway. So the guy's 84 years old, has to go to work to help pay the bills. I'm 60. I do not want to be in that situation. Okay, so I'm looking for a simple, safe, predictable, consistent 1% per week. Sorry about that, dude. 1% a week is what I'm looking for. Doesn't sound like that's what you're looking for. Okay, so the S&P. Now imagine you're retired. You need a consistent, predictable, fixed income. All right. Let's take a quick look at the numbers for the S&P. The SPY. Okay, the S&P 500 ETF, SPY, what it's called. It's $571 per share. Let's take a look at the dividends. Let's go all the way back 2008. It doesn't start off looking very pretty. Amy, take a look. It's at 72, then it drops to 56. Now the difference between 56 and 72, that is got to be 21. 21, that's almost a little bit less than 30%. So let me see if you understand what 30% is. Let's say hypothetically speaking, you get $1,000 a week. 30% is $330. All right, so you're walking away with 660, not 1,000. So week number one, you're getting 1,000. Month number one, you're getting 1,000. Month number two, you're getting 666. That's not consistent. But let's keep on going. 52 to 51, that's back again. 40, 59, 48 backwards. 53, 60, 65, 55 backwards. 63, 77, 61 backwards. 69, 78, 102, 69 backwards, about 40, not quite 40%, probably like a 35% drop. 84, 98, 83 backwards, 94, 114, 93 backwards, 103, 121, 105 backwards. It keeps going up, it keeps going down. There's no consistency there whatsoever. So if you are young, hey, fine, no problem. But as you get older, you need, or I need, a fixed, predictable, consistent income. Because after you stop working, your investments have to make you money. And SPY, you can look at the numbers yourself and see that they're not consistently going up. Now, you guys are all ready for this one? Here it comes, here it comes. I know you're waiting for it. But wait, it gets worse. It really, really does. If you can imagine, can it get worse than this? Yes, it can. Here we go. Now I'm going to look at a quick summary. A quick summary is going to give you an idea of what is the rate of return that the SPY has been giving out. Here it is right here. 1.22%. Explain to me in a manner where you think 1.22% is better than 50%. I mean, I'm waiting. We're all here waiting. We're just dying to hear the answer to this one. Okay, think about it clearly. If you could invest simply, safely, predictably, consistently, with no losses, I shouldn't say that because I took a loss today, and I'm going to explain that in a little bit. But is originally designed not to take a loss. Now, I'm going to tell you why, and I'm going to explain to you the whole situation as we progress. But at the moment, simple, safe, predictable, consistent, 1% per week. Now, why would you invest and put your money into something that's giving you 1.2%? You could give yourself, you could give your money to the federal government and they will give you 5%. I know 5% is better than 1.2, but neither 5 or 1.2 come close to 50%. All right, anyway, if you don't like it, not a problem. Let's keep on keeping on. All right, let's get out of that. Yeah, so I don't like spiders. I don't know if that was plain enough. All right. So we just looked at spiders. Okay, what other questions do we have? Root. Nazrul. I can't even read that name, dude. Nasrul Ahibishmo. Okay, Zada. I'm gonna call you Zada for short. Okay, Nas. How's Nas sound? Okay, Nas. You want to take a look at root? I can probably tell you right now it's going to be a no because I've never heard of it. Now the reason why I say I can probably tell you no, that I never heard of it, because I've been doing this for about 20 years. If there's a company that has consistently increased its dividends for more than 20 consecutive years, Antonio, how are you today? If there's a company that has consistently increased their dividends for more than 20 consecutive years and they have weekly options, well, I'm pretty sure I know who it is. When you throw me up a stock that I've never heard of, ROOT, more than likely it's not going to fit. This don't fit at all. It has monthly options. I don't like monthlies because they just don't work for me. Right? They might be able to work for you. Fine, great. They just don't work for me. It's going to be a no. Sorry. So let's keep on keeping on. Got to make the best of. Do you use 10-minute trading? Well, the name of my website is The 10-Minute Trader, Tyler. It was specifically designed for my 9-year-old daughter. When she was 9, okay, now I'm pretty sure you've been here before, Tyler. But let me show you my daughter.
Hi, I'm JC, and to be as you being part of my internet website called Thingy, which
She looks like me, doesn't she?
Yeah, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be.
That's me. 13, 14 years ago. This is my favorite part. You ready? Hold on, hold on. I laugh every time. Every time I see that, I laugh. I do. So that being said, it was originally created for my daughter, and it needed to take 5 or 10 minutes. So we created a website called The 10-Minute Trader because it was designed for her to be able to trade in less than 10 minutes a day. Simply, safely, predictably, and consistently. All right. So yeah, it takes about 10 minutes once you understand everything. Now, when she was 9 years old, she was able to make about 5% per month. She was accurate, pretty consistently. So she was making more than most professional traders. Okay, but it has to be simple. The tendency for adults, that's me and you, to complicate things and screw it up, yep, it was there. She could come in, breeze right through it because she wasn't bogged down with all the adult BS. Once you're an adult, you don't want to be wrong. You want to be right. You want to make it easy. You want to make sure this. You want to make sure that. Nope, she was 9 years old. She didn't really care. She'd take a look at the stocks. Okay, this looks good. Great, buy it. Okay, this one looks good. Great, buy it. It was all mathematical problems. Okay, you find a good set of stocks. Great, put them into the calendar. As a matter of fact, let's take a look. Find a good set of stocks, throw them into the calendar. When the calendar pops up, this week right here, these are the only stocks we look at. That's it, and that's all. Okay, we don't look at these. We don't look at Kinder Morgan. We don't look at Procter & Gamble. We don't look at MasterCard. We don't look at Comcast. Only these right here. Oh, sorry, these right here. Bank Mellon, Caterpillar, Clorox, Lowe's. Now, this is just one list. I got about 7 lists. Got the Dividend Kings, the Dividend Aristocrats, Dividend Champions, yada, yada, yada. All those nice, neat, fun stocks that we checked yesterday. 9,724 different companies available at any time. Okay? That's a lot. Out of all those companies, only about 300 fit in my requirements. And it's only 2. That's it. Only 2 requirements to make it to my list. That's it, just 2. 20 years of increased dividends and weekly options. Okay? If a company is consistently profitable and they've done it for at least 20 consecutive years, they made it past the big humps. Hump number 1 is the first 3 to 5 years. Most new companies don't make it past 3 to 5 years. It's like 1 in 100 make it to 10 years. Like 1 in 1,000 make it to 20 years. Okay? So if I'm looking at only companies that are consistently profitable and have weekly options, great. I put it into my calendar. My calendar tells me when to look at them. And the reason why I like dividend stocks is because they have a tendency to go up in value just before the dividend is paid. Now, knowing when a stock is going to move, well, that is awesome information. But what do you do with it? It's actually simple. What do you do with information? If you knew a stock was going to go up, what would you do? Well, most people just buy the stock and go from there. Nah, that's not what I'm looking for. All right, we're going to reboot for a little bit and see if we can pump up the volume on this. 50 people, that's ridiculous. So, well, it's a Friday night, so I don't know what to expect for a Friday night. All right, let's try this again. Oh, you've got to be shitting. Hmm. 3, 2, 1. We're going to be live in 1 second. Over here's Johnny. All right, Johnny, tell them what they want, Bill. Well, all right there, Todd. Here we go. Here we go. All right, so that being said, let's keep on moving. Root is going to be a no. We're going to take a look at the companies that are looking peppy today. All right, Fish. How's it going there, Mr. Fish? Wasn't that Abe Vigoda back in Barney Miller? Wasn't his name Fish? All right, sorry about that, you guys. Just had to reboot for some strange reason. The numbers just didn't look too happy. Robert, the Baffy, what's happening? All right, so let's jump in. Let's take a look at Ford. Let's see what Ford did today. Okay, Ford, Panama City Beach, Florida. Woohoo! Ford. Now, I like Ford. It's been around for over 100 years. Pretty good. All right, check it out. It's a high. Here's the low. Here's where it was. Here's where it is. Look what happens. She shoots up, drops down, goes this sideways. 10.23 at this moment in time. More than likely, the 10.50s are going to be the closest. It's going for 8 cents. No thanks. Sorry, no can do for Ford this week. Good. What's happening? More likes can attract more viewers. Keep it up. Way to go. All right. So we're going to say no to Ford. N-U-E. Isn't that Nucor? N-U-E. Nucor. All right. First thing I want to see. High, low. Where was it? Where is it? What direction is it going? 146. The 146 is going for 285. That's almost 2%. I like almost 2%. BRK? What the heck is BRK, Kendra? Canida. Is that right? Canida? BKR. Is that Berkshire Hathaway? BKR. I've never heard of it. Okay. All right, we're looking at Nucor. High, low what's the direction? Up, down, up, down. We're at 146. The 146 is going for 285. That's almost 2%. Let's see what it looks like. A year ago, Nucor was at 147.62. It jumped up to 203, and that was back in the beginning of April. The bottom was on the 10th of September, and that was 138.03. Well, we're currently sitting at 143.56. Okay, 30-day problem for the 30-day bottom is right here on the 24th. She jumped up, pulled back. Now she's going back up again. I like 2 days to the upside, so Nucor could be something halfway decent come next week. All right, NAS. I already took a look at Root, R-O-O-T. I took a look at it. I gave you my opinion. It's a no. That's my opinion for me. It might work for you, and there's nothing wrong with it working for you. I just don't like it for me. Because I like certain things. Okay, number one, it's got to have 20 years of increased dividends. That's number one. Number two, it's got to have weekly options. Okay, Root did not have weekly options. I don't care how glorious and how wonderful you may think it is. I don't care if you work there. I don't care if you live there. If you do it, I don't like it. Do I trade options, Joel? Yes, I do trade options. Let's keep on rolling. NUE, Nucor. James, what about SPY option chain? Haas and Pfeffer, we already talked about SPY, SPY. I don't like it. Okay, if you want to trade SPY, that's fine. I mean, it's good to trade, but why would you want to buy it? It has a 1.22 yield. That means you're paying $580 per share. If it doesn't go your way, you're holding on to it, you're getting 1.22. Now, what about Halliburton? All right, we'll take a look at Halliburton. Okay. KC Brewing made 15% on Carnival Cruise Line over the last 2 weeks. Cool beans. But at this moment in time, we're taking a look at Nucor. So here's Nucor here. We got a bottom right here, which was yesterday. Today is an upside. I like 2 days to the upside. Well, right now we have one. So what does it look like? Well, let's do a quick trade on Nucor, see what it looks like. First thing I want to do is change this. Go down to the covered stock. I like it at 146. The 146s are right there. Okay, 100 shares. Let's do just one contract. All right, one contract right there. Here's what it looks like. Buy one covered call of Nucor, NUE. The 100s, those are the weeklies. That means it expires every Friday. So 8 November 24, that's next Friday. Today was 1 November 24. Every option that was 1 November 24 expired this afternoon. The 146 call option against the new NUE stock. Okay, so that's the covered call we're looking at. All right, so our break-even point right here, 140.59. Well, currently it's at 146. So anything over 140.59 is going to be a profit. Okay, now if she is above 146 next Friday afternoon, which she's at 146.13 now, we're going to have a $541 profit for every contract we do. Okay, so let's pull up the calculator. Okay, if our profit is 541, well, how much is it costing me to do that trade? Well, that trade's going to cost $14,059. That's 3.8%. But the big question is, do you like Nucor? Okay? Okay, Haas and Pfeffer, we already looked at Spider, so we're not going to look at Spider again. Spider was a no. Spider's always no, for me anyway. All right, so that's a 3.8% trade for 1 week. Okay, now I'm in no hurry to make huge amounts of money. And if you're here looking to double or triple your money in a week or 2 or 3, no, you're in the wrong place. Okay, this is boring. This is slow. This is monotonous. This is safe. Okay, safe, predictable, consistent, simple, 1% per week. That's over 50% per year. Now, let's go back to single, back to here, blah, blah, blah. Okay, so I like Nucor. I did write it down. Cooper wants to look at Halliburton. Uh-oh. Okay, Halliburton. Here we go. Halliburton. H-A-L. Now, just to let you know, I do have some Halliburton. First thing I want to see. High, low. Where was it? Where is it? What's the direction? Down, up, down, up, down. Okay. $27.88 is the current price right now. The 28s are going for 67 cents. That is 3%. Now, 3% for 1 week. What is that? 140% per year? Well, let's take a gander. A year ago, Halliburton was at $39.58. Topped out at 41.5, and that was in the middle of April. From there, she just drops, recovers, drops again. This week was the 30-day bottom. So let's go back right here. Here's the last 30 days. Okay, 30 days ago, we're right here at 29. Shoots up to 31 and a half, drops all the way down to 27. Okay, that's the bottom right there. Monday, Tuesday, Wednesday, Thursday, even today, all to the upside. Well, great. That would be a perfect opportunity for this coming up week. So let's take a look at the numbers. Okay, 27.88. The 28s are going for 67. Okay, the 28s. Let's do just one contract. Okay, buy one covered call on Halliburton. 100s, those are the weeklies. 8 November 24, that's next Friday. The $28 call strike against the Halliburton stock. 26.98 to open. So let's take a look. Whoops, no. Okay. Break even is 26.98. Well, the stock's currently at 27.88. So as long as the stock stays where it is, we're good to go. 102 is the profit. So let's get my calculator out again. All right, 102. And what is it costing me? 2,698. 2,698. And that comes a grand total of 3.7%. Well, this is almost as good as the last trade we just looked at, but this one's only costing $2,600 or $2,700. Okay, so you have you got my voice is going again. You got to take a good look at all the numbers. I mean, just because you like Halliburton, just because you like the last company we looked at, you might not be able to afford to do a lot of them. All right. What else do we have to look at? Let's get out of that. Let's get out of that. Let's get out of this, and let's go back to that. All right. What else do we got? Oh, wow. Nothing else? Holy cow. Alrighty then. I'm going to, AWR, American Water. American Water is a dividend king. They've been in business for a very long time. However, they are a monthly. Okay, and I don't do monthlies. AWR, American Water. See? Monthlies, the numbers just don't work. Currently, the stock price is $81.92. All right, so let's take a look at the 15th of November. Okay, the 81, there isn't an 81.52. There isn't an 82. It's 80 or 85. Okay, the 85 is going for 0, and the 80 is going for 2. Well, I'm losing. Look at this. Okay, now, 81.92. The closest strike price is going to be the 80, and it's going for $2.15. Well, if I'm losing $1.92 right off the top, okay, you take $1.92 off of that, I'm walking away with like 30 cents for 3 weeks. Yeah, no thank you. Adam, how are you doing today? All right, user 6569 14487763. Let me call you Oscar. All right, Oscar, you want to take a look at Bitto. Well, I can tell you right now, Bitto is going to be a no. Okay, we looked at Bitto in the beginning of the year, doing well, cool beans. At the beginning of the year, okay, I jumped in at the 32s. Well, look where it is now, 18, and you're going to try and tell me that's good? No, because I was trying to make money off of Bitto earlier during the year, and it did not work at all. Okay, lost money. You want to see if Estee Lauder could go lower? I don't know. It hasn't been this low in a long time. It seems I'm going to be stuck in a position for a while unless there's a good earnings. Inspire me more. What are you looking at? Okay, Lost wants to take a look at Estee Lauder. Okay, we're going to take a look at Estee Lauder first. Inspire me more. We'll jump into Advanced Auto Parts after. Now, Estee Lauder, I do have it in the 90s. Okay? But here's Estee Lauder. Look what it did just recently. Okay, nice up, down, up, down, up, down, up, down, up, down. Big drop. See that big drop? Well, that happened because here's the funny thing. The earnings for Estee Lauder were positive, but the stock went down. But there's something else that came along with the earnings. Now, just because they have positive earnings, they're projecting fourth quarter to be less. And then they cut the dividends. That's why the big drop. Okay? So, currently we're at 66.99. Can it go lower? Yes, it can. Is it going to? Don't really know. But you're not going to get a better opportunity of buying a good stock at a low price, except when it makes a big drop like that. But the question you need to ask yourself before you jump into Estee Lauder is, do you like Estee Lauder? Do you like it enough to buy it and hold on to it? That's a big question, because if you don't want to buy it and hold on to it, don't buy it. Okay? Now, I bought it months ago, and then it just kept dropping and dropping and dropping. Okay, so I'm just going to collect the dividend, and I'm going to sell a covered call on it every single week. Now, Estee Lauder has some pretty decent premiums. See, at the money right now, 67 is going for, what is that, over 2%? Okay, the 68s, almost 2%. 69s, over 1.5%. The 70s, just below 1. And then, but look at the premiums, all the way down to like 8, 9 strikes out of the money and still paying a dividend, still paying a premium. Okay, so great. So I'm in at 90, way up here. And it's currently at 66. Am I going to sell the 90s? No. I'm going to sell right here. I think I sold the 74s. Because I really don't think it's going to hit 74 by next Friday. And then the following Friday, I'll probably move it up to 76 or 78. I want to keep my 1%. So at 90, my 1% is going to be right here at 70, which is 4 strikes out. Okay? But that's me. I'm not telling you guys to do that. I'm telling you figure out what makes sense to you. Where do you think it's going to go? Okay? Is it worth the risk? And there's always going to be a risk no matter what you do. Anytime you buy a stock, you have a risk. You have a risk that it's going to go up and you miss it. You're going to have a risk that it's going to go down and you miss that. So what do you do if you get 74 gets in the money? Well, I roll it forward for a week. And then I roll it forward for another week. And I keep rolling it forward until it comes down, or I roll it forward and I move the strike price up. By moving the strike price up, I'm getting less of a premium, but I'm gaining footage on and avoiding a loss. Okay, inspire me more. Down 10% on Macy's and 12% on Advanced Auto Parts without any wiggle room. Okay, now, I have both Macy's and Advanced Auto Parts. So let's take a look. No Advanced Auto Parts there. Advanced Auto Parts here. And Advanced Auto Parts and Macy's here. Okay, so let's look at here. Macy's. Okay. Take a quick look at Macy's, what it's done. Now, we've been following Macy's since the beginning of the year, okay, which is right here. And we traded all along this channel. And every single week, I made a nice premium every single week. Sometimes 2%, sometimes 3% on Macy's. But now she dropped down here, and now we're into a new channel. Once you recognize what it's doing, it's channeling, it's going sideways. Okay, it's at 15.27 at the moment. Okay, well, my position for Macy's, I'm in it at 16.52. Okay, 16.52 is up here. Okay, hold on, let's go right there. Okay, 16.52 is right up about there. Okay, that's where I'm in it at 16.52. Currently at 15.27. I had to take this and roll it out like 4 or 5 weeks to keep from losing and keep bringing in cash flow. All right? Now, if you can see, I sold the 14.50s. All right? and I got $1 a piece per share. Well, now it's down to 88, and I rolled it all the way out to the 8th of November, which is next week. Do you day trade or are you a long-term trader? Isaac, I am a weekly trader. I'm not sure if you ever heard of that. I buy on Mondays, I sell on Fridays. Okay, so that's Macy's. Now, I'm probably more than likely going to roll it forward yet again. Okay, so by rolling it forward yet again, yeah, see, this time I'm only getting a 12-cent credit. Well, I'm into it at 16, so what I'm going to do is I'm going to push this up to 16, and then I'm going to do a limit order good till cancel. So hopefully it will just stay open and maybe it will fill. Limit order, good till cancel. There you have it. Okay, so here's what it sounds like. Sell 73, yeah, because I got quite a bit of shares. So 73 calendar Macy's. So I'm buying back next week's and I'm selling the week after that. Okay, so let's see how it works out. So I'm buying back November 8th and I'm selling November 15th. Okay, and I'm hopefully getting 1% out of it. So it's off to the races you go. Well, let's see how it holds up. Next, you said you're having an issue with Advanced Auto Parts. Okay. AAP, Advanced Auto Parts. Look at that. Okay, a year ago, we were at 5109, topped off the year at 88.56. Bottom of the 30-day, the bottom of the year, which is the same as the bottom of 30-day period, was yesterday. Okay? 30 days ago, we're at 38.50. Our high was on the 15th, and that was 41.42. Well, from there, she just drops, and yesterday is the 30-day bottom. Okay, I love a 30-day top down to a 30-day bottom because usually it turns around and goes back up again. That's a great time to jump in, unless, of course, you're into it already up here. So where am I into Advanced Auto Parts? 40.62. So I'm into it right about here. Okay, 40.62. So I'm into it here, and it's currently down here. Okay, I'm not panicking, and the reason why I'm not panicking is I sold the 40s. Okay, I'm into it here. I sold the 40s. Okay, I got 57 cents per share. Now it's worth 19 cents per share. And more than likely, I'm going to push it forward yet again. Because at the bottom right here, I do not want to get rid of it here. Because the best time to buy a stock is at the 30-day bottom. Okay, so what I'm going to do is I'm going to see if I can roll it forward another week. $1.74. Check that out. If I roll it forward for one more week, I'm getting $1.74. Oh, fine. I have no problem with that. That's way over 1%. Now, I might not get 1% every single week, but when I get an opportunity to get a, what is that, 3%? Oh, no, that's about 4%. Because I'm into it 40.60. Okay, 4 times 40 is 160. Well, it's 174. That's over 4%. That's great. It works for me. All right, limit order, good till cancel. All right, good. I want to bring it down just a smidge. 171. That's $1,700. Cool beans, if it fills. There's no guarantee it's going to fill. When anytime you put a limit order, okay, it's up to the discretion of the market maker. He's the one you buy from, and he's the one you sell to. What was that question? What do you think about the Turkey 5 interest rate? I've never heard of it. Sorry, Adam. When you roll forward, is it costing you more than the original premium to buy it back at first? Now, if you take a quick look, Adam, Okay, take a quick look at them. I originally sold the option for 57 cents. At this moment in time, it's worth 19 cents. Do you see that? Okay, the original price was 57 and a half. Now it's currently at 19. So what's going to happen is I'm going to buy all these back at 19 cents a share and sell the next one out, and the one I sell out next week is still going to give me a $1.74 profit. So I'm not losing on the original one. Okay, say inspire me more. I hope that answered some of your questions, because I'm basically in the same position you are with both of them. Yet, by rolling forward, you're consistently gaining more time for the stock to move in the direction you want it to, and you're bringing in some type of a premium. Now, most of the time, people just buy a stock and hold on to the stock and only collect the dividends. Well, you're one up on everybody. You're collecting dividends and you're collecting premiums. Okay? All right. Let's keep on keeping on. You, hey, hi, XDV. I have no idea what XDV means. All right, we already looked at Macy's. Lost number, lost dollar. Oh, they got greedy. I've been making good money on these makeup companies. Okay. I am the president. James, I just got liquidated at the 15S chart. Any tips? I have no idea what the 15S chart means. They hit you with a pump fake. All right, lost. I have no idea what you're talking about. All right. Now, I don't do O because the yield is absolutely horrible in my humble opinion. There's no consistency on the dividends whatsoever. Okay, when you retire, you really, really rely on a steady income. That's why they call people on fixed incomes. Okay, I'm on a, not really fixed income, but a semi-fixed income because I'm in control of my income. I don't get Social Security, I'm not old enough. And I don't think, I'd rather just take my money out of the Social Security system and invest it myself. I'm not sure if any guys knew you can do that, but you can. You can always submit some kind of paperwork to the Social Security Department. You say, you know what? Thank you very much for your services. I would prefer to take all the money that you have in my account, withdraw it, and I will take full responsibility for it myself. Okay? Alrighty. Bama Redneck, what's happening? Javis, do you use stock 9.6? I have no idea what that even is. Isaac, if you have a dividend portfolio, what's the best way to hedge my holdings against devaluations year over year using puts? All right, Isaac, interesting idea, great thought, well thought out. However, you're in the wrong place. That's not what I do. Okay, I'm only looking for a simple, safe, predictable, consistent 1% per week, and what you're doing, not what I do. Okay, there are actually literally hundreds of different ways of investing your money. You're investing long term. You want to hedge your positions with some puts. Great. I'm not the person to talk to here. Here, I only teach one strategy and only one strategy. I give it away for free, and it makes an average of 50% per year. If that excites you, great. If not, thank you for your participation, but I don't think this is for you. All right, I'm not a long-term investor. The longest I've ever held anything is 9 months. My average rate of return is between 40 and 70% per year, consistently in the last 15 years. I have no desire to do what you're doing, okay? So, thank you for that again. When doing weekly covered calls, do you recommend rolls? KC Royals, it's always, always, always going to be a numbers game. What does that mean? Well, thank you, Isaac, you're welcome. It's always going to depend on where did I get in? What price did I pay for the stock? Did I sell a covered call? If I did, how much was that? What did I collect? What current value is it at this moment in time? Is it in the money? Is it at the money? Is it out of the money? Is it going to expire? Am I going to get all my cash back on Monday? Or do I have to roll it into another week in the event that I might lose? There are a lot of questions that come up before we make any trades. That's why we're jumping on now on Fridays at 2 o'clock, because we used to jump on at 3, but now there's so many people in the morning in the trading group that we got to get in an hour early so everybody has a chance to take a look at their situation. Do you have full tutorials on this anywhere? User 656-914487763. What the hell were your parents smoking when they named you, dude? Seriously, that's a weird ass name. But anyway, besides the point. Yeah, on YouTube, let me see where it is. Okay, the 10-minute trade. That's my website. You can find that up in the link in the bio. Here's a what's it called? A free PDF. Gives you a quick explanation of what I'm doing. Okay, over here's all my social media: YouTube, Twitter, Facebook, Instagram, podcast. The podcast has over 900. Get that? 900 episodes. Okay, I'm a little frustrated with it because they keep changing it on me. There's over 900 episodes. I don't know if you can really see that very well. But the YouTube channel. There it is. YouTube channel, The 10-Minute Trader. Okay? If you go to videos, the oldest videos go all the way back 12 years. So you can see some of the trades I've done 12 years ago. And 13 years, and 10 years ago.
Yeah. Right up in here. In the last 30 days, you see she's sitting right in this channel. So right into the dividend play. Hopefully it's going to be actually come back right into our dividend play. And moves into another channel. We didn't make any money on this one. This one we actually lost some. We lost 10 cents a share.
Oh, bummer. Lost 10 cents a share 12 years ago. Anyway, yeah, there's plenty of videos, plenty of audios, and there's actually, I wrote 14 books. Where the hell am I? What am I doing? All right, so where were we? Yeah, there's plenty of information there. Oh, MN, that cause it does not fit the strategy. Thank you there, Bama Redneck. Loads of video, yep. When doing weekly covered calls, do you recommend rolling them or sell them? Always about the number, KC. Okay, narrator. I inherited 75,000. Thinking about maxing my 401k with a catch-up for tax-free and living on 75. Alrighty, I don't understand the question. You know, funny thing is, I had a friend of mine. His father passed. He left him 150 grand. A year and a half later, it was all gone. I asked him, say, hey, you want some help with that? He said, no, I got it. I said, okay. Year and a half later, all gone. I made stupid money on a non-div stock DJT calls a month ago, and not my norm, but fun and profitable. Amen, you're right. Okay, we looked at DJT earlier this afternoon because someone in our trading group actually bought some. I looked at it, she shot up, but then she dropped back. Fast money leaves quick. That's right, Adam. Adam, you want to hear something funny? My niece, who never had a real job in her whole life, won a scratch-off ticket, $15 million on a scratch-off ticket. Now, her uncle has written 14 books on investing. You think she came to me to ask me for advice? Nope. 2 years later, she's broke. You imagine that? $15 million in 2 years. Well, she has a house that's paid for. She gave her mother $1 million, and then she just had a lot of fun. Okay, is what it is. Andrea, hey James, Kohl's dropped a lot today. Well, let's take a look at it. Yeah, Adam, it's kind of funny because you think about it. Your uncle is written wait a minute, at the time I've only written 13 books. I've written 13 books, been investing for almost 15 years. Does she ask me at all? Nope. She just blew it all. I hope she had fun. Anyway, 1% of 15 million. Yeah, I did the math. It was $40,000 a week. $40,000 a week, and she just didn't want anything to do with it. Is what it is. All right, where were we? Okay, Andrea, you want to take a look at Kohl's? Kohl's. Now, I have Kohl's also. You know that. I have Kohl's actually in a couple accounts. So let's take a gander. And Kohl's did fall again today. Okay, high, low. Where was it? Where is it? What's the direction? Look at this. Up, down, sideways. 1825 is where we are at this moment in time. The 18s are going for two. Wait, that's expired. That's today. That one don't count. Okay, 1825. The 18s are going for 67. That's nice. The 1850s are going for 44. Well, the 1850s is over 2%. The 18s, once you take that 25 off of there, that makes you 42. Because the 18s you get 42, the 1850s you get 44. That's a no-brainer. Do the 1850s. Because at 1850, okay, look where it is. Okay, it's going to hit a bottom, turn around, go back up. A year ago, we're at 22.23. We got a top in end of March at 29.58. The last 30 days, okay, look at that. The last 30 days. 30 days ago, we're at 21. Let's open that up. That's right where it is. That 21.20 drops down to 19, shoots back up to 21.20 again, drops down. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days in a row she's going down. How much further down do you think it's going to go before it's going to stop? And then people like me are going to say, holy shit, Kohl's at 18 bucks? Hell yeah. All right. Question. Uh-oh, I missed some questions. Narrator. Emin, I made stupid money on DJT. We talked that one. Kohl's dropped a lot. We talked that one. TLT, all right. Chris Waters, how does one balance dividend yield with the growth potential of the stock? Chris, when you tell me dividend yield, most likely, wait a second, all right. When you say 1%, are you talking about 1% of your total trading? I'm talking about if I have $100,000 in my account, I invest all of that money. 1% is $1,000. A $100,000 account, $1,000 a week, over $50,000 a year. That is 1% per week, over 50% per year. That's what I'm talking about. All right. Okay, narrator. Question. Is that a good strategy for the $75,000? I don't believe tax rate when I retire will be higher. Oh, did anybody else laugh at that one? Seriously, anybody else laugh at that one? He doesn't believe the tax rate is going to be higher when he comes to retire. All right, anyway. Chris, he is not interested in growth and looking for cash flow. Yeah, so anyway, narrator, I have no idea how old you are. I have no idea how long you want to wait until you retire, okay? Now, I could retire very comfortably on $75,000 because $75,000 is $750 a week. That's $3,000 a month. Okay, if you can't retire on $3,000 a month, it is what it is. However, I honestly don't know what to tell you because I don't give advice. Really, I don't. But you need to talk with someone who is qualified to help you with your situation and your goals. Now, you're going to get a lot of different answers. And if you go with traditional people, they're going to say invested it into an ETF, invested into an index fund, or do this or do that. Great, fine, if that's what you want to do. I always tell people, get rid of the middleman, invest yourself. It's not that difficult. The trading strategy I'm showing you was created for my 9-year-old daughter. She was able to do it in less than 10 minutes a day. 10 minutes a day to 1% a week. 1% a week is 50% per year. 50% on $75,000 is, what is that, $37,000 a year? Something like that, 37, somewhere there, 37.50. Okay, and yeah, Redneck is right. I'm not interested in growth at all. Okay, now you might be interested in growth. Narrator, you might be interested in growth, not, cash flow. But you could take the strategy I do. Instead of taking the money out like I do, you can always just put the money back in and let it grow. They call that a DRIP, dividend reinvestment plan. So all the profits you just leave in there and let it grow. You can actually double your money every 14 to 16 months. If you go the traditional route with the 401k, I think 401s are getting an average of 6, 8, maybe 10 if you're lucky. Anyway, let's keep on going. Okay, don't. All right, Chris, but I'd find that good. Stick with mentioned the write up, be less premium on covered call. When you say 1%, yep, we did all that. Narrated, that's a tax person question. I wouldn't say tax person. I would say tax strategist or tax planner. Okay, so Steven thought that was funny. Yeah, I don't think that the taxes are going to be higher by the time I retire. Retire now. Say the same. Yeah. Okay. At retirement, you generally have less income than when working. So yes, possible. Okay, Redneck, true. Many stocks paying a high current yield is because the price has fallen. Could be. 1% per week. Yep, he's correct. All right. Chris, if the underlying stock is falling, the dividend might not create a positive. Okay, I got that also. Oh, holy shit, that's all the questions. Shit, I could quit now. Oh, damn it, another question. Isaac. Correct me if I'm wrong, but it sounds like you have a defined working capital as you pay yourself a surplus of that working capital on a weekly basis. I suppose you can look at it that way. Look at it this way. Hold on. This makes it so much easier. It really does. All right. You see right here? Account number 1 started off with $117,000 at the beginning of the year. Okay? It is currently at $168,000. I added another $21,000 in July because I merged 2 accounts together. Now, year to date, I've already taken out $42,600, but still, I'm at 168. So actually, I went from 117. I added 21, so that's 138. So 138. I'm at 168. I took out 42, so that's 210. So you add it all together, it's 210,000 so far for the year. If you slide down, here are all my trades. Look, 5 stock: Riley, Riot. Okay, Riley, Riot, Alley, Marathon, and Micron. Okay, I made 2.28% week number 43. That was last week because we're currently just finishing up week 44. So now I haven't calculated this one or this one yet because the math is an issue and I'm retired and I just feel like being lazy. Okay, I'm still getting used to being retired. All right. So I made 2.28 here, 1.77, 3.73, 2.3, 3.6, 1.8, blah, 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 blah. All the numbers are right there. I would love 1% per week. Chris, you probably would. You're new here. Chris Waters. This is the first time I'm seeing this name, and I'm really good with names. Okay? Are you saying you're investing your entire account balance each Monday in the goal of 1% per week? Stacy, that's exactly what I'm saying. Makes sense, thank you. Looking forward to retirement next year. Carrie Dills, way to go. So Stacy, I average about 98% of all my money is invested. I leave a couple of $100. Okay? So this account here, okay, I got $2,400 just sitting there doing nothing. Just 2,400. The other 127 is all invested. Okay, this account over here, I got $1,000 sitting there, and 133 is all invested. Why are you going to have money just sitting around? Okay, you actually honestly think the federal government is not going to create more inflation and the value of your dollar go down? And so that's like the second good laugh I've had today. I got a good audience tonight. All right, looking forward to retirement. Good. Kent, same 1% would be amazing, but rolling everything is tricky. I need practice. Well, Kent, you're new here. I think this is the second time I've seen your name pop up. Okay? But it can be done. Oh, wait a minute. What you didn't see. Okay, so every single one of my trades is listed here for this year. It goes all the way back to January. Right there. Okay, my very first week. There you go. Macy's, General Motors, Ford, CVS. Okay, 2.12. CVS, General Motors, LUV. That's Southwest Airlines, Comcast, Ford. I made, what was that? 2.99 there. But look, this is this year from here up. Now watch what's down here. What is that? That right there is my very first entry in my blog post in 2011 when I first started posting and sharing. Okay, my starting capital was $82,000 in 2011. Okay, I averaged 9.75% for the first month. I missed today's class, rolled 4 stocks. Thank you for showing us that, Paul. Way to go. So 2012, 2013, so on and so forth, blah blah blah, and they just keep looking at all these. Now this is from an old blog post I used to have. Reclaiming some lost ground from last 2 weeks, 13.6 overall this year, with the weekly average up to 1.5%. Not too bad for catch-up session. We started out fast and furious, but got dragged down to earth with some more realistic performance. That was, I forget which week that one was. But here's another one. Another setback this week, 10.7% overall. Okay, we slipped to 1.3%. Okay, that's a tragedy. I slipped from 1.5%, I slipped down to 1.3% per week. Okay, I've been doing weekly trading for a very long time. Now, I don't understand why you guys are just finding out, because I used to do this all the way back since 2008. I first started posting my trades in 2011. Okay, I've been on YouTube since 2011. Okay, I got only 1,400 followers on YouTube after 15 years. TikTok, I got 24,000 followers after 2 years. Go figure. Stacy, nice weekly tracking, James. You're doing 98% of the balance with covered calls each Monday. Exactly. That's kind of all right. See, I had a manufacturing company about 15, 20 years ago. Okay, I had 26 employees. Okay, now, can you imagine walking into work one day and seeing half of your employees just sitting down doing absolutely nothing? It's the exact same thing. If you leave money sitting in your account doing absolutely nothing, just sitting there, what the hell are you waiting for? I believe 100% in the U.S. economy. That's the only companies I do. You know, Capital One Finance, Ford, General Motors, AT&T, Visa, MasterCard, McDonald's, Walmart. These are all your neighbors, your friends, your relatives. I believe in the American economy. Why would I leave my money sitting there, letting those a-holes in Washington, D.C. print more money, devaluing my money? You may not know it, okay? But 40% of all the money in existence was created in the last 4 years. So if you had $100,000 in your account 4 years ago, it's worth 40% less because now there's 40% more money, which means your money is worth less, 40% less in the last 4 years. I'm not leaving my money sitting aside. I invest it. I get 1% every week. Okay, I'm staying a little bit above the inflation. Okay, 50% a year is not that bad. I'm guessing Schwab offers paper trading. Yes, it does, Stacy. I actually insist. That's kind of a harsh word. Yeah, no, it's not that harsh. I insist, people, before you put any real money in. Okay, I actually have people in the morning trading group. They pay $100 a month to watch me trade and ask questions, and they paper trade. They don't use real money because they want to get it right first before they put real money in. Now, when you are paper trading, now I've been trading for over 20 years. I still have a paper trading account because I still make mistakes. This year I made 2 mistakes. I lost, I think, I forget how much did I lose on AEO. Wait a second. All right, yeah, this account has no losses. Isn't that terrible? No losses in this account all year. I think it's this one right here. Right there. Nope, 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 nope. Right here. All right, I got 2 losses, Walmart and Ford. That's it. 2 losses in this account, no losses in the other. Okay, I made a mistake on Walmart, lost 120 bucks. I made a mistake on Ford, lost 28 bucks all year long. That's it. 2 losses in these 2 accounts. All right, keep on going. So you are going to make mistakes, Stacy. That's why I encourage everyone. Encourage, that was the word. Encourage people to paper trade first. Get good at it. And you will know, trust me, if you do paper trading long enough, you will know when it's time to put real money at risk. Okay? Because you got that little, what do you call it? That little demon on your shoulder saying, buy, 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 buy. Greed, 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 greed. Eventually, you'll get it under control and you will make good, smart, consistent trades. Okay, that's why when I created this trading strategy for my daughter when she was 9 years old, tell us about the companies regardless of the strategy. All right, quick 56. What company you want to know about? Okay, you're under the impression that I know all about all these companies. No, I only do about 300 companies. That's about it. And most of the companies I do, you probably heard of. Okay, DE, John Deere. They make tractors. What else do you need to know? Okay, they've been in business for over 100 years. They consistently increase their dividends for over 25 consecutive years. And they have weekly options. They are consistently profitable for more than a quarter of a century. What else do you need to know? Fifth Third Bank, consistently making profits. What else do you need to know? Mandalese, US Bank, Cardinal Health, Comcast, Cisco, American Express, Bristol Myers Squibb, JP Morgan, General Dynamics, so on and so forth. What do you need to know about these companies? Every single company on my personal list. Okay, the stuff you guys have me look at this stuff. This goes all the way back until January. Okay, let's see this. Okay, this is this week. All right, this is last week. Here's the week before. Here's the week before. Week before. Week before. Week before. Week before. So on. So forth. All the way back to January. Okay? Every time you guys have me take a look at a stock, I write it down on my list. I take a look at it. I give you my opinion. I show you where the high is. I show you where the low is. I show you where it's trending. I show you if you do a covered call, which is the safest strategy there is, what kind of return you could expect to make if you were going to do it, or if I was going to do it. I don't give tips. I don't give advice. Okay? I'll tell you about the company. Every company that I personally do, 20 years or more of increased dividends. That means they are consistently profitable. They have weekly options. Great. What else do you need to know? Okay, for me, the only thing I need to know for me to make a decision is Is the company consistently profitable? When I say consistently profitable, I mean 2 decades of profits every single year, higher and higher and higher and higher. Not every once in a while. No, no, no. 20 consecutive years. All right? That's what I'm looking for. Weekly options. I'm not in this for capital growth. I'm in this for cash flow. Weekly cash flow. All right. AMD and Intel. Ooh, I like both of those. Archer Daniel Midland and Intel. Isaac. If trading weekly options, why only trade dividend stocks if you're going to make trades prior to the EX dividend date? Isaac, that's an awesome question. Really, seriously, it is. And I'm going to tell you. Are you ready? Because this is kind of very important. All right? Now, the nice thing about a dividend, well, let me preface this first. There's only 2 reasons, you understand? 2, 50-50 shot, 2 reasons why a stock moves. Okay? It is an unknown reason or a known reason. What does that mean? An unknown reason, you have no clue. Okay? A death of an important person, a lawsuit coming out of the middle of nowhere, natural disaster, something going on that you cannot plan for. That is an unknown reason. Okay, a known reason, something you can plan for. Earnings, dividends, seasonality, something you can plan for. The only reason I like dividend stocks is number 1, they consistently share their profits. I like that. I'm looking for cash flow. They share profits. Number 2, just before the dividend date, stocks have a tendency to go up in value. So if I know when a stock is going to increase, I have an opportunity to have the odds and probabilities in my favor. So if I'm looking at Lowe's, and I know Lowe's goes up in value just before the dividend every single quarter or every 90 days, well, great. When Lowe's dividends right here, I want to start looking at it. I want to look 2 weeks before on a Monday. Okay? If the stock is going to go up, what strategy am I going to use? And there are a lot of strategies out there. As a matter of fact, let's take a look at a few. Vertical. A vertical strategy. That allows you to take advantage of one option over another, allowing you to make a rate of return anywhere between 10 to 75% on a weekly basis. That's freaking awesome, but it's very risky. A single option. You can buy an option, and as it increases in value, you make more money. However, the stock has to go up in value in order for you to take advantage of this. Number 3, a back ratio. Confusing as hell. You sell 2 out of the money, and you buy 1 in the money. The in the money one is high enough to pay for the 2 out of the money, so one offsets one, and the other one increases. Confusing as hell, and all 3 of them expire eventually. Calendar. Oh, awesome also. But you're doing 2 options. One far out, one close by. The one far out decreases slower than the one near. So if I'm going 6 months out buying an option there and I'm selling one this week, well, the one here this week is going to decrease in value a lot faster than this one, offsetting the profits. I can go on and on and on about all these freaking strategies. The safest one is the covered call. Where you buy the stock, you own the stock. Until the day you sell it, the purchase price that you paid for it never increases, never decreases. You can write a covered call on a call option on a weekly optional stock every single week. Most people buy stocks to get a dividend once every 90 days. That just doesn't work for me. I want a consistent cash flow. I want to buy a good quality stock and write a covered call every single week. Now the ones down here, the butterfly, the condor, the iron condor, vertical, low call, those get confusing as hell. And it's going to say to just about everybody here, what the fuck is he talking about? Because it's confusing. This strategy that I'm sharing with you for free gets up to 50% return consistently last 15 years. I have the data to show you the trades that I actually made this year and the year before and the year before and the year before. but it gets confusing doing all the other ones. So yeah, I show one strategy and only one because it's simple. It's safe, it's predictable, it's consistent, and if 50% a year is not enough for you, then you're definitely in the wrong place. You're wasting your time being here. Okay, yeah, but you got to own at least 100 shares for a covered call. Yes, you do. But for a dividend capture strategy, which is what my daughter first started out with, dividend capture, was you can buy one share, you can buy 5 shares, you can buy a half a share and capture the dividend. Because if you know the stock is going to go up before the dividend is paid out, well, you buy it 10 days before or 2 weeks before. As it moves up, take your profit. The biggest challenge you're going to find with most beginner traders, there's a few of them. Number one, you're going to hit the wrong button. Number two, you're going to sell instead of buying. You're going to buy instead of selling. You get the terminology wrong. Or you might be just damn greedy. Oh, it's going up. Wait a minute, it's going up, it's going up, it's going up. Oh, fuck, it just went down. Take your profits. It ain't a profit until you take it. Okay, so I can go on and on and on. I teach one strategy and only one strategy here because it's simple and it's safe, it's predictable, and it's consistent. If you're not okay with 50% per year, you're definitely in the wrong place. Okay? So yeah, stocks go up, stocks go down. The reason why I do dividend stocks is because they go up in value just before the dividend date. If they do not pay a dividend, you don't know when they're going to move, and there's no predictability to them. Now, if Lowe's pays a dividend every 90 days, well, I know in every 90 days it's going to move up. So then I can buy it just before the dividend. As it moves up, I get my 1%, I get the hell out. I say, thank you very much. I'll see you again in 90 days. That's actually really good info. Alex, that's why I only do dividend stocks that have consistently increased their dividends for a minimum of 20 years. You're going to see companies that have really high dividends, but they've only paid out for 1 year, 2 years, 3 years. Well, any company can do that. But if you're consistently increasing every single year, year after year after year, well, you have to be profitable because the dividend is a portion of the profits. You can't increase the profits unless you're increasing. Wait a minute, you can't increase the dividends unless the profits are increasing. So if you're increasing your profits for 20 consecutive years, well, you must be profitable for at least 20 years, which means there's none of that new business bullshit going on. Okay? I will not look at any company that has less than 20. Well, once in a while I will if it's on Warren Buffett's list or there's a good reason for it. But I like dividend stocks because they have a tendency to go up in value. Now, also, Coke comes to mind. Yes, 140 years old. I cannot picture a scenario where Coca-Cola no longer exists. Is it a safe trade? I think it is. Is Coca-Cola going to go bankrupt? Maybe they will, but I seriously doubt it. They're the number one soft drink in the world. Not just the United States, not just North America, not just North America, South America, but the whole world. Yeah, okay, I think it's safe. But Coca-Cola only pays out about 0.5% per week. All right, 0.5% per week, that's 26% per year. I bet you nobody here is getting 26% per year, except for those that have been following me for a while. I do this method with many smaller positions, have about 10 different stocks each week, none over 40. There's absolutely nothing wrong with that, Secretariat. Hey, dude, Secretariat, I haven't heard from you in a while. How you been? Okay, so Wells Garcia wants to take a look at Archer Daniels and Intel. I like Intel. Archer Daniels, I don't think I've ever bought them. Andrea, Estee Lauder, James, had to jump in. I think it still has room to come down. Everything has room to come down, Andrea. But is it going to? You got to remember, Estee Lauder is actually at the low, I think, of a decade. I don't think it's been this low in a long time. Losing is part of the process. George, you're absolutely right. Esther Haley, how are you today? Hi, James. What is a good stock to invest to get higher dividends? Okay, you're asking the wrong questions, my dear. Intel is getting bumped from the Dow. Okay. I'm not quite sure what that means. The premiums they're paying are awesome. Okay, they've been in business for a long time. They're getting bumped from the Dow. Big deal. Are they going out of business? Are they stopped making whatever it is they're making? Now, Aster, when you say higher dividends, I'm not quite sure what you mean. Now, you're relatively new here, and I appreciate you wanting to interact. Sit back, relax. We're not looking for high dividends. We're looking for safe returns. No, they're in business for sure. Yeah, I get that. But why are they getting bumped from the Dow? What's your take, Nvidia? Hell no. Okay, take a look. See, when anybody tells me Nvidia, I kind of get an idea what their mindset is. You're jumping on the train of the fanfare. Okay, it's going up in value. Do you remember the gold rush in the 1980s where it went from 250 all the way up to 850? Yeah, the people who bought at 850 had to wait 3 decades. You got that? 3 decades, 30 years to break even. At some point in time, no, profitability bullshit. Take a look at their dividend. Their dividend is 1 cent per share. Their book value. If they were to liquidate everything they have, the book value is $2 per share. Hell no. Terribly sorry. I don't play that game. I don't ride the new pony, because the new pony is going to run out of steam at some point. Okay, same thing with Bitcoin. It hit 72,000 at one point. Well, when did it hit 72,000 again? The people who bought at 72, how long are they going to wait to break even? It's an honest question. All right. Okay, what do we got? Secretariat. I do this method. Yep, we got that. Hi, James. What? Okay, we already asked that questions. You have such a wealth of knowledge. I enjoy listening. Barrio, how are you today? Nobody's here. Back again. Now, Barrio, you're new here. Well, at least this is the first time I've seen you interact. Okay, Mike, how you doing? Carrie Dills, cool beans. Nobody here. Okay. Would you sell the stocks and dates that you have set up so we can get into it? All right. Golden Codex. God bless me with abundance of riches and buildings because I have the money. I wasn't into taking care of God, blah, 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 blah. Okay, thank you very much. That's kind of irrelevant to what we're doing here, but okay. Berkshire. I don't do Berkshire Hathaway. They don't have dividends, which means they don't share their profits, which means it's very difficult to figure out predictably when they move consistently. Do you see that? Consistency, predictability. 86 is in the house. Woohoo! Are you saying that your net gain loss is 1% per week, or are you saying your losses are next to nil? Okay, Stacy, let me see you again. Account statement. No, not this account. All right, Stacy, can you see this number here? No, Stacy, number one, this page right here, this screen right here is live on YouTube. You probably cannot see these numbers on your iPad or on your phone. That's why this is recorded live every night on YouTube. It allows you to see all those little tiny itty bitty numbers. So if you go up over to here, year-to-date profit and loss. Okay, whatever is in a parenthesis is a loss. Okay? So, number one, a $9,000 loss on Marathon. But it's not a loss because I still own it. What does that mean? That means I refuse to sell at a loss. I roll it every single week. Every single week, I bring in a consistent premium every single week. So I have not lost anything on it. It's what's called a paper loss. So if I bought it at 100 and now it's at 80, I have a $20 loss. Okay? That's a paper loss. Until I sell it for less than what I paid for it, it's not an actual loss. So it just looks that way. But I have two actual losses. See, right down here, $120 off of Walmart and $28 off of Ford in this particular account. Now this other account here, okay, you see it right here? 1, 2, 3, 4, 5 losses profit year to date, but I still own every single one. I have not had a single loss in this account at all year. See these from here, these are all profit, all down here. So it's over 66,000 in profit. Once you add these back in, Okay, it'll be over 80,000. I refuse to sell any of these at a loss. I get a covered call on them every single week. Every single week, I get anywhere between a 0.5% to 2% on these 5 positions. I will not sell them at a loss. It doesn't make sense to me. It's something I just don't do. Now, I have 6 accounts. I share 3 of them with you guys. Okay, so let's keep on going. Let's keep on keeping on. Got to make the best of bad situation. Okay, keep going. Okay, Mystic Spot. When do you purchase your dividend stocks? On a Monday. And what date do you set them to expire, and how do you identify the strike? You're new here, dude. Sit back, relax, chill, grab some popcorn, soda, whatever, get comfortable, and just watch. Okay, so you ready? I'm going to actually do 1 or 2 with you. You ready? Okay, let's do Estee Lauder, just for the fun of it, because it's kind of an interesting spot at the moment. Now, Estee Lauder, I always say, never buy something you do not understand. Okay? If you don't understand it, don't buy it. If you look at the company and think to yourself, do I want to own this at this price and have it for the rest of my life? That's the mentality you should go into before you buy anything. Granted, if it hits your target in a week, you say, thank you very much. I'll see you the next time. All right, that being said, look at Estee Lauder. The 30-day high was 30 days ago. The 30-day low was yesterday. So first question is, do I like Estee Lauder? Well, Estee Lauder is currently at $66.99. Okay. The bid, the ask, the last, the high, the low, the open and close, 11 million shares traded today. At $66.99, the closest one is going to be the 67. That's $1.60 a share. So are you ready? Are you ready to roll? Let's go. So let's do a covered call. First thing I want to do is I want to change this right here where it says single. And I want to change that to it says covered call. Now, I like Thinkorswim. I've been using it for 20 years. 15 years ago, I looked at 20 different trading platforms. I wrote a book about it. It's available on Amazon. Is that right? Yeah, available on Amazon. And it tells you about all the different trading platforms and which one I like best. I like this one. That's why I've been using it for 20 years. There may be other ones out there that are better. I don't know. It's of no concern to me because I grew up in a time where if it ain't broke, don't fix it. It works fine. I'm good. I don't want to have to learn something else. Okay, nobody here. If so, would you inbox me? Okay, nobody here. I always tell people, if you want to chat with me, send me your number to my inbox on TikTok. Somebody sent me their phone number 2 weeks ago, and they didn't send it in TikTok. So see, I sent you my number. Well, no, you didn't, because I didn't get it. Anyway, $66.99. How do I pick my strike price? Well, let me think. I can get my 4-year-old grandson in here and say, hey, buddy, if the stock is at $16.99, where's the closest strike price? 67. $66.99. The closest strike price is going to be 77. I mean, it's only logical. $66.99. The closest whole number is 67. Right there. All right, so I want to buy it at 67. There we go. Now, I'm only going to do 100 shares because if I do 10, people freak out and say, I can't afford that. Okay, so hit the confirm and send. Before you hit the send, once you hit that send button, it goes right to the market maker, and then he fills the order. Before you do that, read it out loud. One of the mistakes most people make when first starting is they think they hit the right button, and they hit the wrong one. I'm guilty of that also. I AEO this year. I think I lost $1,500 on AEO, but I made it back because I hit the wrong button. Okay. By 1, covered call, EL, that's Estee Lauder 100s. Those are the weeklies. 8 November 24. That is next Friday. I like weekly options. They expire every single Friday. So, first thing Monday morning, this order will fill. the 67 call option against Estee Lauder, limit order at the open. Great. The next line down is the break-even point. It's at 66.99 now. The break-even point is 64.91. So if the stock closes Friday afternoon, 4 p.m. on the 8th, next week, at 64.91 or above, I have some sort of profit. Okay, my best profit is going to be if it's above 67. Okay, now how much am I making on this trade? Well, maximum profit. Do you remember the part where I say simple, safe, consistent, and predictable? I know what I'm going to make on this trade before I even make it. Most people buy a stock and they just wait for it to go up. Sorry, that doesn't work for me. I need to know exactly what I'm going to make on a weekly basis. Okay, when I say covered calls are the simplest and the easiest and the safest, well, you know everything before you even do it. Okay, my maximum I'm going to make is $209 per contract. So one contract, $200. 4 contracts, $800. 1,000 contracts, well, you figure it out. Okay, so I'm going to get my calculator out. If my maximum profit per contract is $209, well, how much is it costing me? Well, it says it right here. Cost of trade including commissions, $6,491. So I take my 209 and I divide it by 6,491. That's what it's costing me for 100 shares. Hold on. Hold the thought. Hold the thought. Let me finish. That gives me a rate of return for the week, 3.2%. Now, you might be asking yourself, what the hell is 3.2%? Well, you multiply that by 52, and that'll give you a rate of return for the year. Multiplied by 52, because it's 52 weeks in a year. That's 167% if you can get 3% every week. Okay? Okay, I get 3% once in a while, but not all the time. Okay, so my music spot. If the stock glow 1 ITM in the money, sure, you made a profit. But if the shares are gone, then what? I have no idea what you mean by then what. Okay, so hypothetically, the way a covered call works, okay, because apparently you don't know the way the covered call works. The way a covered call works, let's get rid of this. All right, the way a covered call works, are you ready for this? I'm going to buy it at the current price. The current price at this moment in time is $66.99. Now, I am selling, hold on, sit tight. I am selling to whoever wants to buy it. Do I care who buys it? No, I honestly don't care. If the market maker has it posted here, he is required by law to fill it at the price that he is selling it for. If you go into a grocery store, the corner store, and a gallon of milk is $3.50, you're going to buy it at $3.50. The store owner is going to sell it to you for $3.50. It's that plain, that simple. So here's the thing. If come Friday, November 8th, which is next Friday, which is 5 trading days away, if the stock is $66.99, well, I keep it. I only get rid of it if it is over 67. I'm selling somebody the right to buy it from me at 67. So at 67, someone's going to buy it from me. If it goes from $66.99, if it goes to 100, well, whoever bought it from me at 67 is entitled to buy it from me at 67. What am I getting out of it? I'm getting the premium. The premium is $1.60, which is 3.5%. Do I care if the stock goes up? Don't care at all. Do I care if the stock goes down? Maybe. If the stock goes down, I keep it. I keep the money, I keep the premium, I keep the stock, and I do it again next week. Now, if somebody buys it from me from 67, well, I get all my money back. I'm back into cash. And I still got that 3.5% for the week. So I buy it for $100, I sell it for $100, and I get the premium. whatever the premium is. In this case, the premium is 3.5%. If I get 3.5% every single week, well, that's over 167% per year. It's not that difficult. Adults have a tendency to make it more complicated than it needs to be. All right, you have to sell them if they're in the money. No, you don't. Then the stocks are gone in your portfolio. Yeah, I get that. But why are you doing it in the first place? Are you buying a stock to get married, run off into the sunset, live happily ever after, and pass along to your children and just collect the dividend every 90 days? Well, fine, you're in the wrong place. That's not what I'm doing. I'm buying a good quality stock, selling somebody the rights. But then what? What do you mean, then what? All right, well, let me see if I can explain this in another manner. Okay. All right. One contract is 100 shares. I am paying $6,491 to buy 100 shares of Estee Lauder. I'm selling somebody the right, not the obligation, to buy it from me at $67. If the stock on Friday is higher than $67, that person is going to buy it from me. I am going to get my $6,491 back into my account. Now I get to go do another company. Because as the stock is going up, I take my profits, I say thank you, and I move on to something else. Because what is the stock going to do? Whoops, let's get out of there. Okay, this is what stocks do. They go up, they go down. 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 They do not come to your house and wash your dishes. They do not wash your car. They do not mow the lawn. They do not make your bed, leave little candies on the pillow. No, they go up, they go down. They go up, they go down. When they go up, you sell. When they come down, you buy. When they go up, you sell. When they come down, you buy. But here's the thing. Never buy a company you don't want to hold. Because if you buy and it drops all the way down here, well, you got to hold on to it for a while. But you can roll it forward and collect another premium every single week. That's why I was asking. Thank you. Yeah, you get your money back. All right. If I have a car sitting in my front yard, I slap a for sale sign at $1,000. Joe from down the street says, "Hey, I want to buy your car." Okay, he gives me $100. I'll give you $1,000 on Friday. Okay, if I don't come back on Friday, you can sell it to someone else, and you get to keep the $100. The $100 is kind of like a security deposit, kind of option. That's what they call it, an option consideration. If you don't exercise your option within a certain period of time, you lose that option. That's what we're doing it for, because 80% of all options expire worthless. So I don't buy options, I sell them. I want to be on the winning side consistently. All right. Okay, William, Berkshire Hathaway is a no. They don't have dividends, which means I can't tell when they're going to go up. Stacy, well, you saying that your net gain, okay, if I have $100,000 in my account, $98,000 is invested at all times. If I make 1% on that $98,000, well, that's $980 every single week. Intel, scrap the dividend. Did they scrap the dividend or did they just cut it? Oh boy, where was I? Oh, I missed some questions. Uh-oh. Would you sell the stocks in the dates? I said, okay, whatever. Berkshire Hathaway, no. If so, would you inbox me? All right, nobody here? You actually send me a message and I'll respond to it. Intel scrapped the dividend. Did they really? NTC. Oh, it says the August. Okay, so let's see what their dividend should be. Dividends only. November 6th. Okay, so the dividend is coming up. Yeah, they cut the dividend, didn't they? From 37 to 13. Now they usually pay in the first week of November, which should be next week. Okay, so are they paying a dividend next week? Come on. What the fuck? It's not working. Okay, October, November. Okay, apparently it's frozen. What a bummer. Yep, the program appears to be performing slowly. An error report, blah, blah, blah. Okay. Yeah, Intel. They're paying a dividend on Monday. Wait a minute, that says 2017. That's wrong. How the hell did I get to 2017? 18, 19, 20, 21, 22, 23, 24. It's not showing. Well, maybe they did. I don't know. It's always a possibility. Okay, were you just talking about Intel? Sorry, just got here. Mark 4, yeah. I think I saw that Nvidia is being added to the Dow. Okay. Why isn't it popping up? Okay, so Intel had it last year on the 6th. Okay, Intel had its earnings yesterday. Earnings were yesterday for Intel. Do you only sell covered calls and not buy? Yeah, Isaac, I do not buy calls at all. I don't buy calls. I don't buy any options at all. I buy the stock. I sell the option against it. Okay, were you talking about Intel? Yes, I was. Tyler, yo, I traded Jameson Williams and Travis Etienne for Tony Pollard. Is that solid? I have Bigsby too. Okay, Tyler, I haven't heard of any of those. Okay? No, I don't know what age you are. I have no idea what interests you have. Only stocks I do are the ones that just about everybody knows. Intel, IBM, AT&T, Bank of America, Wells Fargo, Home Depot, Lowe's, Williams-Sonoma, companies like that people have heard. Household names: Clorox, Walmart, McDonald's, Philip Morris, Kraft, Heinz, ketchup. Those are the only ones I do. What about Boeing preferred? No. Those are football players, he mentioned. Really? Lowe's is a football player? Home Depot? I know Cadillac is a football player. Okay, what about Boeing? No. Okay, what about Boeing? Okay, I asked Boeing twice. Okay, Boeing is BA. So we'll take a gander at it. Why not? BA, Boeing. All right, so here we are looking at Boeing. First thing I want to see, the high, the low, where was it, where is it, what direction is it going? Up, down. Okay, up, down, that's all it's doing. Okay, Kivo, you want to take a look at Kroger? Give me a minute, we'll get to it. A year ago, Boeing was at 190. Topped off at 267. That was in the middle of December. From there, she drops, goes sideways, drops again. Here's the bottom of the year right there. 3 weeks ago, the 14th, there's the bottom. 146.02. From the bottom of the year, she shot up, back down. That was Tuesday, and then back up again. Good opportunity to jump in and see if you like it. But before you do that, take a look at this. This is what is called the seasonality. Now, seasonality, Isaac, sell side pro, buy side opponent. Love it. Oh, that was a good one. Whew. All right, right here. This is what is called a seasonality chart. For those you don't know what it is, all the way to the left is January 1st. All the way to the right is December 31st. What about Palantir? Hell no. No dividends, no thank you. The blue line represents the movement for this year. Look, January drops, sideways, drops again. Here we are right here where the blue dot is. The red line represents 10 years worth of information, or 10 years worth of data. That's 2014, 2015, 16, 17, 18. It's all on top of one another to give us an average of what it's moving. Okay, that's it. I want to see this area right here, because this is where we currently are. So I want to take my cursor, put it on the little blue dot, click left, drag right. Here's the next couple of weeks. You can't mistake this for anything else. So on average, over the last 10 years, from right here, the beginning of November, till the end of November, that's nice to the upside. Grace and mercy. If I was starting out with $500, what do I do? Okay, number one, Grace, I don't know who you are. I know absolutely nothing about you. My number one suggestion is get a paper trading account, follow along, and practice, practice, practice. I'm here every single night. It doesn't cost you anything to be here. You can look at the trades that we pull up. If they make sense to you, do it in a paper trading account. At some point in time, you want to pick and choose the own stocks that you like. I always suggest people the dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then take a look at Warren Buffett's list. If those make sense to you. Okay, we're talking about companies like Clorox, Colgate-Palmolive, Procter & Gamble, General Mills, Kraft, ExxonMobil, other companies like that, McDonald's, so on and so forth. All right, so that being said, Boeing has a tendency to go up this time of year. Okay, now, before you decide, let's go back to, whoops, let's do that again. Okay, down, up, down, up. So it's going in up at the moment. It's in an uptrend. Okay, very easy to see. Get rid of that. And we take a look at the current price, 155. Now the question that's on your mind should be, do I like Boeing at 155? Do I mind buying it and holding it at 155? Dennis Mancini, how are you doing? Haven't seen you, buddy. Nice to see you tonight. Do I like at 155? Well, the 155 is going for 375. That's over 2% for the week. Now remember, I'm only doing this weekly. Jump in on Monday, get out by Friday. That works for me. 1% a week is over 50% per year. If that makes sense, well, hang out and check it out. So let's do one, okay, real quick. Covered stock, let's get rid of that. The 155's right there. Here we go. 100 shares. Okay. Buy one, covered call, Boeing 100s. Those are the weeklies. 8 November 24. That's next Friday. I'm curious. Did you like TD Ameritrade better than Schwab? Yes, I did. The maximum profit on one contract is $405. Well, that's going to cost you 15 grand. Now, we've seen 3 different covered calls. One was 2,500. This one's 45,000. The other one's, I think, 12 or 13,000. But let's check out the numbers. Okay, 405 is the profit. It's going to cost $15,095, and that comes at 2.68%. The last stock we looked at was 3.5%. Well, this one's only 2.6 for the week, but it's Boeing. So you need to ask yourself a question. What stocks do I like? Do they make sense? Do I have that kind of money to do it? And is it something I'm willing to hold on to? Okay, so that's Boeing. Let's get out of that, get out of that, get out of that, and get out of this. And back to the charts. All right, 86. Yep, if your stock is about to get called away and it's at a loss, do you buy it? Why would it get called away if it's at a loss? Okay, and yep, okay, every Monday is when I buy the stock. Every Monday is when I sell the options. And by the time Friday comes along, I get a good idea of where it's going. Friday afternoon at 2 o'clock, we jump on. When I say we, me and all the my students who are actually in the trading group that I have. So we take a look at 2 o'clock. What about SoFi? Hell no. Sorry. No dividends, no thank you. No weekly options, no thank you. No consistency in their profits, no thank you. I'm very picky what I do. Only 300 stocks meet my criteria. There's 9,724 stocks available to choose from. Out of all of those, I only like about 300. Okay, SoFi is not one of them. Sorry. Where was I? Oh, so I'm buying on Monday. I sell the option on Monday. Tuesday, Wednesday, Thursday, we look at it and we get an idea of where it's moving. Because I'm online twice a day. Once in the morning with the trading group, once a night with you guys. I have a good idea where all my positions are. Stacy, that's why I have 98% of my money invested at all times. I'm here all the time. I'm retired. I don't have a job. I can do whatever I damn well please. Okay? I made a commitment to be here every day. I've only missed 5 days so far this year. I was sick one day, took someone to the emergency room one day, and then the hurricane that came through St. Petersburg, right over my house. No electric, no cable, no water, no internet, no phone, no trading. I think I lost $2,000 that day because I couldn't get online. All right, anyway, let's keep on going. I forgot where we were. Oh, well. Yeah, you just roll it forward. Oh, so anyway, on Friday, we take a look at what did we buy it at? What option did we sell? What did we sell the option for? What is the option at currently? What is the stock at currently? What does that mean? Does it balance out? Do I let it get called away? Do I sell it at a loss? Do I roll it forward? Okay, the questions of tomorrow cannot be answered with the information we have today. Now this afternoon, okay, we took a look at a lot of stuff. This afternoon, I told you I was going to go over this today. This afternoon, I took a loss on Wynn Resorts, WYNN. Okay, I bought it at 98. Okay, I sold the 77s because it dropped down to 71 a couple of months ago. I had it for 6 months. All the dividends, all the premiums that I had, I ended up losing 3,200, I think it was, on Wynn because the option wouldn't fill. Okay, I tried selling it Wednesday, I tried selling it Thursday, I tried selling it today, and it would not fill. All right, Gracie, thank you. Now, you said you're subscribing here on YouTube. Okay, not much happens on YouTube. I just use it for broadcasting. Okay? All right. If you're stuck here, we already talked about that. Kroger. Okay. Kivo. Kivo wants to take a look at Kroger. Kroger's a great company. Okay. Now, you ask the people in Massachusetts about Kroger, and they'll say, what? You ask the people in Massachusetts about Piggly Wiggly, they say, whatty? See, I'm from the Northeast. Okay, so I travel a lot, so I know all the different places. You know, you got Publix down here, you got Angelo's up there, you got Stop and Shop up there, you got Piggly Wiggly or somewhere around here, you got Kroger, yeah, all the big major stores. Okay, so anyway, Kroger. High, low, where is it? Look at this. Up, down, up. We're at 57.01 at this moment. The closest strike price should be the 57. It's going for 68 cents. That's more than 1%. John, how often do you get stuck holding a stock? I'm guessing you just hang on to the stock. Well, yeah. Okay. Now, John, you're new here. I'm really good with names. Uh-oh. Isaac, another question. The questions of tomorrow cannot be answered with the information today. That's golden nugget. Every trader needs to hear that one. Well, Isaac, it's not mine. John F. Kennedy said that. The questions of tomorrow cannot be answered with the knowledge we possess today. That's what he said. I like to take credit for it, but it's not mine. All right, so John, you're new here. Okay, rule number one. Okay, first of all, John, like I said, you're new here. So the trading strategy you are seeing was created for my 9-year-old daughter back in 2008. She jumped up on my lap and said, Daddy, can you please teach me what you're doing? I want to do it too. Okay, 9 years old. It has to be simple. Safe, predictable, consistent, and no way for her to lose. 5 rules. Rule number 1, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must. And then make sure the numbers work. What are the numbers? The numbers are simple. What am I buying it for? What is the closest strike price and what am I selling it for? And how much am I collecting? Is that over 1%? Great. If everything checks out, then I want to look at the charts. I say charts, there's 5 charts I want to look at, and there's 5 things I want to see in the 5 charts. First thing I want to see, the high, the low. Where was it? Where is it? Where's it going? Up, down, up, down, up. Okay, 5 charts I want to look at. The 1-year chart, cool beans. The 90-day chart, high, low, was, is, direction. 30-day chart. Okay, high, low, was, is, direction. Down, up, down, up. 4th chart, the seasonality. What does the stock normally do this time of year? Okay, the blue line represents this year. Okay, this is the movement. January 1st, way over here. December 31st, over here. The red line represents the 10 years worth of movement. Now, we're right here right now, the 1st of November. Look at the movement in the last 2 months. See if there, I take my cursor, put it right in the blue dot, left click, drag right. Okay, bring my crosshairs right down here. What does it look like it's doing for the last 2 months? Well, it's going to the upside, very slightly, but I'm good with that. It's not going down, it's not going crazy, it's going nice and steady. That's perfect for covered calls and spreads. Well, we're doing covered call. It's the simplest, safest, most predictable strategy there is. I hope that answers that question for you. All right, there we go. All right, so that's Kroger. Take a look at Kroger. Okay, the last 30 days. Okay, last 30 days, 57, dropped down to 54, shoots up to 58 and a quarter, drops back down here. Wednesday is the new bottom. Okay, going forward, it's the new bottom. Yesterday was an update, today's an update, perfect opportunity. I like 2 days to the upside coming off of a bottom. Your 30-day top's right here. Here's your bottom. She turned around, now she's going back up. Well, great. Monday, what does it look like? Well, it looks like 57 on Monday. The 57 is going for 68. Well, 68's over 1%. What is it exactly? Well, let's figure it out. Okay, 68 divided by the purchase price. What was it, 67? Grand total of 1%. 1.01. That's the percentage. Let's keep on going. Oh, 86 says Pfizer. All right, so anyway, I like Kroger. I'm going to write that down because it looks appetizing. Kroger for next week. All right, yes, he will do you new to covered call this week. Yep, Pfizer. We'll take a look at Pfizer. PFE. PFE. Tra-la-la. Yowza. Okay, so Pfizer. High, low, was, is, direction, down, up, down. 28. The 28.12. The 28's going for 44. Nice. Okay, so 28 losing 12 cents. Walking away with 32. 32 is more than 1%. Love it. So let's take a look at the numbers. A year ago, we were at 30.61. Okay, the bottom of the year, it looks like a quadruple bottom. Check it out, right here, in April and May. Okay, the end of April, beginning of May, right at the 25.20 area. Now the top, right here, that was 31.54, and that was the end of July. Look at the movement. Down, up, down, up, down, up, down, up, down. See, right now we're looking for a new bottom for it to turn around and go back up again. Okay, doesn't have it quite yet. Let's look at the last 30 days. Okay, here's the last 30 days. Take a look. 30 days ago, 28.80. She drops back up to $30.40. Back down here. Tuesday was your 30-day bottom. I wouldn't call this to the upside because it's still going to the downside. It's at 28 at the moment if you like Pfizer. Now, I would wait for 2 days to the upside, but that's me. You guys have to pick what choice you like to have. All right, that being said, holy cow, we got 44 questions still. 86, Redneck, I'm glad you guys are answering all these questions. Rather buy a long vertical to protect the call, I sold and closed the position if not profitable. All right, John, that works, but it's not the strategy that I'm looking at. Okay, because I don't buy anything long term. If the price is 67, does it automatically sell, or do you have to do something to sell it? Okay, Stacy, if the stock is at 67, now remember you bought it at 66.99 and you sold the rights at 67. At 67 exactly, there's a 50-50 chance that you might still have it come Monday. Now you get to keep the premium, that's yours. Okay, but if that's 67, there's always that chance that the market maker said, let it go. It happens. It happened to me a couple of times. So you have to have the same performance for 365 days. I have no idea what you mean by that. Hey, Redneck, you did 14% for October? Good for you, dude. I have no idea what I did. See, actually, honestly, I don't keep track of it. If I get over 1% a week, good, fine. Money's there, great. I don't really pay attention to it, which is kind of weird if you think about it, but I'm at that point in my life where it doesn't mean anything. British Petroleum's looking tempting. Ooh, BP. So Pfizer is on our list to keep our eye on. Okay. Now he said British Petroleum looked good. BP. Okay, so British Petroleum, high, low, where was it, where is it, what's the direction, it channeled sideways, up, all the way down, gap down. Ooh, I like a gap down. I like a gap down just before the bottom because gaps have a tendency to fill. If you're in a gap down and a 30-day bottom, well, that's a double whammy. Last 30 days. Okay, oh, nice, check that out. 30 days ago, we're at 31.50. She jumps up to 33.50, drops back down, back up. One gap down, two gap downs. 30-day bottoms on Wednesday. Thursday was an up day. Friday's an up day. You got this gap here and this gap here to fill. And you got this gap up here to fill. That looks freaking sweet. 29.30, the closest one should be the 29.50. It's going for 29, between 29 and 31. So you might get your 1% out of it. If you like British Petroleum. Okay? That's the big question. Do I like British Petroleum? Do I like British Petroleum at $29.30? Am I willing to hold on to it until it hits my target? Mr. H, it's going to vibrant up and down. I have no idea, Mr. H, what that means. Yep, that's why stocks change every week. When is Hershey's next dividend? Don't know. Well, then mow your lawn if you own the stock that mows. Well, alrighty then. That's funny. It's insurance, yes it is. Uh-oh. I missed all these questions. Alright, here we go. Alright, Wang 1986. Do you also sell call options? Yes, I do. Luke, sell puts to buy and sell calls to sell. All right, Luke, I don't do puts here. Okay, here I teach one strategy and only one strategy, and that is covered calls, and that deals with call options, not put options. Okay, I want to keep it simple, safe, predictable, and consistent. Okay, after you perfect this one, fine, move on to something else or add something else. All right, Luke, why wouldn't he? Okay. Not announce the historical date in November. Okay. If he's buying low and selling high, why not collect premiums both ways? Interesting. It's gone. This might be the last month for the Intel dividend. Might be. You never know. He uses the EX dividend date as a trigger that he keeps. It's simple. Adding puts is confusing. Yeah, he's true. It is. I guess Luke, he does. Just doesn't share the strategy here. Thanks, 86. Yeah, I do a lot of different strategies. I just don't share them here. Now think of it this way. I've been trading for 20 years. I know a shitload. I'm talking a shitload, all right? I could probably come up with a whole bunch of crap to make most of you confused as hell. But that would defeat the purpose. My purpose here is to share a strategy that is simple, safe, predictable, and consistent and allow you to get 1% a week. That's over 50% per year. I am giving this information for free. You do not need me after this, okay? After this information, you should be able to do it on your own. However, I have an ulterior motive, okay? I am eventually going to open up my own trust fund or my own hedge fund. Something that I can offer to people who don't have the time, money, or desire to do it on their own. Okay, and I have to have verifiable information, or scratch that, not weekly. Okay, verifiable trades so that people can see what I have done in the past. So it makes it more enticing for them to buy the shares once I make them available. So you have the privilege of being here at the beginning. Okay, now I'm not going to be selling shares of my corporation for probably another year or two. Okay, and if you can be guaranteed 20% per year, I could probably sell a whole shitload of shares of my company. But I still need the track record, and it has to be verifiable track record for everyone to see. So if you take a look at my my page, goes all the way back to the beginning of January. Okay. If you click on here, look, January 2nd, 10:01 a.m. Okay, Macy's, General Motors, Ford, CVS. Okay, what was my rate of return for that week? 2.12%. Okay, in this account here, CVS, General Motors, Southwest Airlines, Comcast, and Ford. And here I made 2.99%. Every single trade I've done this year is available for you to see online. So in 2 years, when I do sell my stock to my own corporation, you guys have seen me do it, and you walked me through with it. Now you've seen them all. Now you think to yourself, wait a second, I remember this guy. He gets an average of 50% per year. Now I know the insurance company is only going to allow me to guarantee 20%, maybe 15% if I'm lucky. Okay, insurance companies are very fickle. Even if I can prove I do 50% every single year, they won't guarantee it at 50%. Okay, it has to be an insurance dedicated fund because I have other tricks up my sleeve. So you get the good fortune of being here and taking advantage of what I'm sharing. But I'm only sharing one strategy, and it gets 50% per year. And if 50% per year is not good enough for you, I can't help you out. Or I should say, I'm not going to help you out. Okay? Ivan, should I dollar cost average on Harley Davidson? Average price is 35. Okay, Ivan, I like Harley Davidson. I actually have Harley Davidson in 4 different accounts. That's weird. All right, so here's Harley Davidson. Now, the nice thing, Ivan, about Harley Davidson, what I really liked about it when it popped up, let's take a look at the last 30 days. Actually, we can go back further than that because we actually jumped into Harley Davidson about 3 weeks ago. Okay, here's this week, that week, this week. This is where I jumped into Harley Davidson, right here. Okay, or was it right? Yeah, right about here. See, it went up, it came down. Okay, here's the bottom, 2 days the upside, and I jumped in right here at 35. Then she went up, she came back down here. So I got 3% here, Wait a minute, no. I got 3% here, 3% here, and 3% here. So I got 9% in Harley Davidson in the last 3 weeks. I'm perfectly okay with getting nothing for the next couple of weeks. But here's the thing. All right, so Harley Davidson, okay, here's the bottom right here, the 30-day bottom. She went up a little bit and she pulled back. I'm not concerned. Now, Ivan, the reason why I'm not concerned, take a close look at the seasonality. Now, the seasonality for Harley Davidson, look at this. You can't mistake this for anything else. Here's where we are currently. Okay? We're right here currently. Now, APA, we're not going to get to it. We're at 1123. Now, Ivan, I jumped into Harley Davidson here. Look, nice upward trend all the way until the beginning of December. I want to be out of Harley Davidson within the next 3 or 4 weeks, but it goes to the upside. I have no problem with it. I got 3% first week, 3% second week, 3% third week. I'm going to collect the dividend, and now, okay, even though I jumped in at 35 and it's currently at 33, we'll take a look at this. Okay, so this week, the 33s are going for 30 cents. I'm in it at 35. Now, I sold the 33s, okay, and they expired worthless. All right, so I got to keep that money. Now, if you take a look over here and you sell the 33 puts, well, that's 4%. All right, so you're catching 4% by selling a 33 put. Now, what happens if it drops to 33? Well, you get assigned. Well, now you have it at 33. You caught 4%. Okay, so you catch 4% here, and you only catch a little bit less than 1% here. So you add the two together, and you're getting 4% between the two trades. So it averages out at 2% each. Okay? So you can dollar cost average with the put. So don't just buy the stock. Sell the put first. It offsets your cost. Okay, so you can catch 3% here. Oh no, 4% here. And less than 1% over here. So by combining the two together, okay, you already own the stock. So sell the call and then sell a put on the exact same side. Okay, then you're going to dollar cost average down. And you should do just fine. All right, we got 5 minutes left. We're going to go through the last questions. Uh-oh, I missed a bunch of questions. How about Boeing? We already did that one. What when you do with UAL after this rally? United Airlines? I haven't even looked at that one. Luke, he teaches only one strategy for free. Thank you, Redneck. It's difficult for some people to understand that. I teach one strategy for free, and that strategy just so happens to have a 50% rate of return. Dennis, actually, I didn't fill. It got canceled. Sorry to hear that. I will try to roll Harley Davidson again this Monday. Now, Dennis, if you have the money available, we were just talking about Harley Davidson. Okay, if you have the money available, sell a put. That way, you're getting a nice premium on the put. If you get assigned, well, you're dollar cost averaging. Okay, because right now, I jumped in at 35. I sold the 33s. I collected on the 33s. I'm going to sell the 33 puts. Okay, so if it's below 33, I have to buy it at 33. Okay, which means my dollar cost average now is 34. Because I got it at 35. I sell 33s. Meets in the middle at 34. A lot easier to get rid of it than 36. Do you trade REITs? Yes, I do. If so, MDV and PSA. I don't know who those are. If you want to chime in tomorrow, MDV and PSA. Right now, I like MPW. MPW has been very nice to us. Okay. I only prefer to full port O day SPY calls and pray that this strategy is a definite winner. Okay, Luke, I have no idea what you're talking about. I stay away from the spiders. I do. The rate of return is horrible. Intel out of the Dell. Yep, I got that one. I like this, made 14% for this month. Way to go, Redneck. One thing I like about it, it's like 5 or 10 minutes. Crypto lover is coming. Yay! Alrighty then. That was an accident. Okay. Oh, no worries. Everything pops up. What time do you jump on what days? Okay, Paul, I'm on every single day, 9 p.m. until 11:30. We got 3 minutes. I'm out of here. It's Friday night. Now, I always say, if at 11:30 there's 200 or more people, I will stay. But at 64, no, I'm not staying. Public storage unit, yeah, no, they haven't been around long enough. If stock rally, take the profit, move on to the next one. Thanks. That was an accident. Oh, no worries. Please tell me scalping trading. Yeah, that's exactly what we're doing. Kinda. Def is solid strategy, especially those starting off to learn options. Yeah, Luke, it is. Correct. That's why he sticks with the only one, for simplicity. Thanks. Appreciate it. Check back with you. Alrighty, Paul. Wife is home. I'm off to bed. I'm off to bed in 2 minutes, redneck. I hear you. I know a few people that are retired and all they do is sell calls on their holdings. Well, why the hell not? It's free money. Absolutely nothing wrong with that for those who can do it. Can you see is how is access that seasonality chart? I have no idea what that means. The grammar is totally off. For sure wish I could do that, but I'm a small trader. Okay, Luke, you can do what's called dividend capturing. Okay, simple strategy. It's safe. I'm paper training. I sold Siri at 27, so you think it would be good to do that again for week at 28. Mickey, how are you doing? Let's take a quick look at Siri, just for the fun. It'll be my last one for the night. Okay, so Mickey, beautiful morning, Psycho Trader. Well, it's not morning yet. Thank you for the stream, mate. Cheers. Have a good night. Let you jolly good there, lad. Go have yourself a tosser. Anyway, Siri. All right, look at it. 30 days ago, we're here at 24. She drops down to the bottom of 22, shoots on up to 28, drops back down to 26, back up to 29. Why would you want to do it at 28? Look at all this space here. It's way too much space here for me. At a 30-day high, there's usually profit taking. All right, next. You are capturing premiums every week. When do you also collect dividends? Now, Marwan, I don't really look forward to collecting dividends. That's kind of just like icing on the cake. If it happens, it happens. I would prefer that it didn't. Now, the reason I say I prefer that it didn't, if you look back at my calendar, okay? If you look back at my calendar, if I like Kroger, I'm going to jump into Kroger 2 weeks before the EX date, which is the 28th. All right? I want to give it this week to capture my 1%. If I don't capture it there, I'm going to look at this week to capture my 1%. If I don't get it there, I'm going to look at this week to capture my 1%, and I get the dividend. Okay? I don't want to collect the dividend because as soon as the dividend's paid out, the stock has a tendency to drop. Stocks go up before the dividend, the stocks go down after the dividend. So I don't want to capture the dividend. I want to get in, I want to get that premium, sell it, and then move on. I went and got me some Harley. Cool beans, Paul. I got me some in 4 different accounts. All right, Laurie, did your Intel get called away today, or did you keep it to sell next week's call? Okay, hold on a second there, Laurie. Intel. I gotta find out where my Intel is. Okay, no, Laurie, I pushed my Intel out to next week. Okay, I'm into it at 22.50. I sold the 22s. I picked up a buck 52, but it's for 8th of November, which is next Friday. Okay, so no, I still have my Intel. I just pushed it off for another week. I know them all. So who the hell cares? All right, I have no idea what you're talking about, Ryan, but okay. Thanks, James. 86. I appreciate all you do, brother. Andrea, James, when you say upside, how big of an how big up, movement up? Andrea, I honestly, it could be 5 cents for all I care. Seriously, as long as it's higher than when I sold. Because say if I bought it at 100 and it's at $100.01, I'm okay with that. Applied Digital, check that one out a little bit of that. Okay, it's past 11:30. I'm done for the night. I'm just doing the courtesy of going through the last couple of them. Hey, Silverwolf, dude, you know I'm done at 11:30, brother. It's 11:33. I'm just cleaning up the mess and getting ready to move on. I believe any movement is up as long as it's up. Thank you, 86. He's right. James, should I dollar cost average on Harley Davidson average price? Okay, Ivan, we already talked about that a little while ago. Dividends are a bonus. Thank you. Do you sell put options? Not in this account, I don't. Please keep us informed on your trust fund. I will. I'm also going to be looking for board members. How would someone on ODSP invest? I have no idea what that means. Silver Wolf, catch you later. I'm just going through the last of the questions. Random. Okay, I have no idea what ODSP is. Ivan, okay, thank you for that. I can't read that, but okay. Laurie, Ivan, I did, printed on it, shares got away. Okay. Got TCS, it just split, might split again. I have no idea what TCS is. Poseidon's Last Mole, I'll catch you later. Board members, I qualify. Yeah, okay, so the board members is a little bit more than that. And it's not board as in I am bored with this. It is board member as in members of the board. Okay, so I think I'm going to go with either 11 or 13 board members. I'm not 100% sure yet, but we'll iron out the kinks when that time comes. If you're seriously interested, let me know. Okay, there will be a, what do you call it? All the information will be available when the time comes. All right, so that being said, I'm going to call it a night. I did all the questions that were up. So that being said, you guys have a great night, and I will catch you again tomorrow night. So signing off on Instagram. You guys have a great day over here. And now, Facebook, for some strange reason, you just don't want to work. Okay. My phone dies right when you started to answer my question. Sorry, Laurie. You know what, Laurie? The screen right here is live broadcast on YouTube. So as soon as I sign out, you'll be able to go back and watch it from the beginning and how the questions will be answered. All right, so we're done. You guys have a great night. We'll see you again tomorrow. Tomorrow, I love you tomorrow.